What is happening, tech enthusiasts? Welcome back to Qualcomm Pulse, where we dive deep into the innovations that are shaping tomorrow. The pace of change is relentless, and staying ahead means knowing what's next, right now. Get ready, because we've got a packed show with updates that are already making waves and will undoubtedly redefine the landscape. First up, we're diving into the competitive arena where giants clash and talent is the ultimate prize. How does a titan like Samsung attract the best minds when industry titans like Nvidia and TSMC are also aggressively seeking top engineering talent? We'll explore the strategies and the stakes in this high-stakes talent war. Next, we're shifting our focus to a company that has reached an unprecedented milestone, solidifying its position as an absolute cornerstone of the global technology sector. This manufacturing powerhouse has not only hit a staggering $1 trillion market capitalization, but continues to expand its influence worldwide. We'll break down what this means for its stock, its future, and the entire industry that relies on its precision. Then, we're getting an inside look at the dynamic relationship between two of the most influential figures in the AI revolution. Imagine the CEOs of Nvidia and TSMC sharing a laugh and discussing wafer prices. We've got the candid moments and the behind-the-scenes details of their high-stakes discussions, including new chip developments aimed at a critical market. This is the kind of high-level strategy you won't find anywhere else. And finally, we're examining a significant strategic decision from a leading semiconductor manufacturer that could have ripple effects across the supply chain. Amidst global pressures, a major player is reportedly making a critical choice about the equipment used in its most advanced fabrication facilities. What does this mean for innovation, for partners, and for the future of chip production? Stick around for all the details and analysis. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. The talent battlefield, Samsung's strategic play. In the cutthroat world of semiconductor innovation, securing top engineering talent isn't just an advantage, it's the bedrock of future success. With industry titans like Nvidia and TSMC aggressively expanding and pushing the boundaries of what's possible, the competition for the brightest minds in chip design and manufacturing has reached a fever pitch. How can a company like Samsung Electronics, a formidable player in its own right, effectively attract and retain the engineers needed to compete at the highest level? This isn't just about offering competitive salaries. It's a complex strategic challenge involving company culture, research and development investment, and long-term vision. Samsung operates within a global ecosystem where advancements in areas like AI, high-performance computing, and next-generation mobile technologies are directly tied to the capabilities of its semiconductor division. Nvidia, a leader in AI and graphics processing units, and TSMC, the world's largest contract chip manufacturer, are not only technological rivals, but also significant employers of the specialized engineering talent that Samsung desperately needs. These companies are investing billions in new fabrication plants and research facilities, creating a high demand for skilled professionals in areas such as process technology, materials science, and chip architecture. The pressure is on for Samsung to differentiate itself in a market where talent is scarce and highly sought after. Sources indicate that industry leaders are constantly innovating their recruitment strategies, from offering unprecedented research opportunities to fostering highly collaborative and innovative work environments. The ability to provide engineers with cutting-edge projects, access to advanced fabrication technologies, and a clear path for career growth are critical factors. Furthermore, the geopolitical landscape and the push for technological sovereignty are influencing where companies choose to build their facilities and, consequently, where they seek to recruit talent. Samsung's challenge is to create an environment that not only matches the compensation and project scope offered by its competitors, but also provides a unique value proposition that resonates with engineers passionate about shaping the future of technology. This includes highlighting its own significant contributions to the semiconductor industry and its commitment to pioneering new manufacturing processes and chip designs. The success of Samsung's strategy in this talent war will be a key determinant of its ability to maintain and grow its market share in the highly competitive semiconductor sector. This intense competition for talent is a clear indicator of the immense growth and strategic importance of the semiconductor industry. Analysts and industry insiders are closely watching how Samsung, Nvidia, and TSMC navigate this crucial aspect of their business. But how is one of these giants performing on the global financial stage, hitting a massive valuation milestone? We'll break down the numbers next. TSMC's $1 trillion triumph, a look ahead. The global semiconductor industry has a clear leader, and its name is Taiwan's Semiconductor Manufacturing Company, TSMC. This manufacturing titan has achieved a monumental feat, recently surpassing a $1 trillion market capitalization, a testament to its unparalleled dominance and critical role in powering the modern technological world. Often described as the secret tutor to tech's biggest names, Apple, Nvidia, AMD, and countless others, TSMC's precision manufacturing is the bedrock upon which much of today's digital innovation is built. Its stock recently hit an all-time high before a slight retraction, underscoring the inherent volatility in the sector, yet the long-term outlook remains exceptionally strong. TSMC's strategic expansion is a key driver of its success and market confidence. While the company rejected an invitation to build a plant in India, it is aggressively investing in the United States, commencing construction on its third fabrication facility in Arizona. This move, alongside strategic planning for a facility in the UAE, is part of a broader strategy to diversify its manufacturing base and mitigate geopolitical risks associated with Taiwan. Simultaneously, TSMC is pushing the envelope in technological advancement, investing heavily in new packaging facilities and next-generation process nodes, positioning itself for continued leadership in the burgeoning fields of artificial intelligence and high-performance computing. These investments are crucial as the demand for more powerful and efficient chips continues to skyrocket. Despite its commanding market share, estimated at over 60% of the global chip foundry market, TSMC faces genuine challenges. The ever-present geopolitical tensions between China and Taiwan pose a significant risk to the global chip supply chain, a vulnerability that cannot be overstated. Additionally, the cyclical nature of the semiconductor industry means that periods of inventory gluts and oversupply are inevitable. Furthermore, TSMC faces intensifying competition from rivals like Samsung and Intel, both of whom are receiving substantial government backing and are determined to capture a larger slice of the market. The company's reliance on Taiwan's energy production also necessitates continued investment in clean energy solutions, such as its significant deal with the Ørsted wind farm, to ensure cost-effectiveness and environmental sustainability. Wall Street sentiment remains overwhelmingly bullish. A consensus among 16 analysts points to a buy rating for TSMC, with 5 issuing a strong buy. The average 12-month price target suggests a notable upside potential. While short-term market fluctuations and geopolitical concerns are expected, TSMC's diversified growth drivers and its indispensable role in powering AI, data centers, and consumer electronics revolutions position it as a foundational element of tomorrow's digital economy. For patient investors, TSMC represents not just a company, but the very infrastructure of future technological advancement. Audience impact. This $1 trillion milestone highlights TSMC's undeniable influence, with investors and industry watchers alike recognizing its central role in global tech. Speaking of influential figures and critical partnerships, the CEOs of Nvidia and TSMC were recently seen in high-stakes discussions. We've got the inside scoop on their conversation. High-stakes banter. Nvidia and TSMC CEOs meet. In the fast-paced world of AI chip development, the relationship between key players is as crucial as the technology itself. Recently, Nvidia CEO Jensen Huang, a titan in the AI revolution, made a significant trip to Taiwan for high-stakes discussions with C.C. Wei, the CEO of Taiwan's Semiconductor Manufacturing Company, TSMC. TSMC, the world's leading contract chip manufacturer, produces virtually all of Nvidia's cutting-edge processors, making their partnership the engine behind Nvidia's ascent to a multi-trillion-dollar valuation. The interaction between these two leaders, captured in candid moments, offered a glimpse into the complex negotiations and collaborative spirit that define their crucial relationship. During Huang's visit, a video shared by a local news outlet showed the two CEOs in jovial conversation, with Wei humorously referencing Huang's immense wealth, estimated at $155 billion, calling him a 4 trillion NT guy. Huang, in turn, playfully retorted, "Still, you're paying for dinner." Wei responded with a smile, indicating he didn't mind covering the meal as long as Huang agreed with TSMC's wafer prices, a remark that drew further laughter and a quick agreement from Huang. This lighthearted exchange, while seemingly casual, underscores the significant ongoing negotiations regarding wafer pricing, a critical factor for Nvidia as one of TSMC's largest customers. TSMC manufactures over 90% of the world's most advanced semiconductors, and its pricing strategy directly impacts the profitability and competitiveness of its clients. While the specifics of their discussions remained confidential, Huang indicated to Reuters that his primary reason for visiting Taiwan was to engage with TSMC. This visit comes at a time when Nvidia is reportedly developing a new AI chip specifically for the Chinese market, provisionally named the B30A, based on its latest Blackwell architecture. Beijing's reported slowdown in purchases of Nvidia's existing H20 chips has fueled speculation that the B30A is designed to help Nvidia maintain its market share in China amidst evolving trade dynamics and restrictions. Huang also reportedly visited to express gratitude to TSMC for successfully taping out 6 new chips for Nvidia, including a GPU and a photonics processor for upcoming Rubin architecture supercomputers. These advancements are vital for Nvidia's continued leadership in AI and high-performance computing. Adding further context, Huang shared his confidence in TSMC's future, stating, "Anybody who wants to buy TSMC stock is a very smart person." This sentiment aligns with market optimism, as TSMC's Arizona facility recently recorded its first profitable quarter, and the company has significantly increased its U.S. investment plans. Despite some conflicting reports regarding the total U.S. investment figures, the commitment to expanding manufacturing capabilities in strategic locations remains clear. Analysts from UBS and Wedbush remain optimistic about Nvidia's prospects, citing strong demand for its latest GPUs and increased spending from hyperscale clients and infrastructure projects. Qualcomm Pulse's own rankings show Nvidia maintaining a strong upward trajectory, reflecting its dominant position in the AI market. Audience impact. This candid interaction between industry titans highlights the personal dynamics behind major business deals and the critical nature of the Nvidia-TSMC partnership for the future of AI. Now, let's turn our attention to a major strategic decision potentially impacting global chip production. We're looking at a significant move by TSMC regarding its advanced fabrication facilities. TSMC's strategic shift: no Chinese equipment for 2 NM fabs. In a significant move that could reshape supply chain dynamics within the semiconductor industry, Taiwan's semiconductor manufacturing company, TSMC, has reportedly decided to exclude Chinese-made equipment from its upcoming 2 NM wafer fabrication facilities. This decision, driven by a confluence of geopolitical pressures and strategic considerations, signals a clear direction for the company as it pushes the boundaries of chip manufacturing technology. The new 2 NM lines are slated to begin operations in Hsinchu, Taiwan, in 2025, with further expansions planned, making the choice of manufacturing partners and equipment suppliers a critical factor in their successful deployment. The move to operate exclusively with non-Chinese equipment in its most advanced fabs underscores the increasing scrutiny and strategic maneuvering occurring within the global technology sector, particularly concerning the supply chain for cutting-edge semiconductors. As the undisputed leader in advanced chip manufacturing, TSMC's decisions carry immense weight and influence. The 2 NM process node represents the next frontier in semiconductor technology, promising unprecedented levels of performance and efficiency. Ensuring the reliability, security, and technological sophistication of the equipment used in these state-of-the-art facilities is paramount. By opting out of Chinese-made equipment, TSMC is likely aiming to preemptively address potential supply chain vulnerabilities, comply with international trade regulations and sanctions, and maintain its technological edge in a highly competitive environment. This decision is not made in a vacuum. It occurs against a backdrop of heightened US-China trade tensions and increasing pressure on global companies to align their supply chains with geopolitical realities. The United States, in particular, has been actively promoting the reshoring and diversification of semiconductor manufacturing, encouraging companies like TSMC to invest in domestic production facilities. While TSMC is already making substantial investments in the U.S., including its third fab in Arizona, the exclusion of Chinese equipment from its most advanced facilities in Taiwan could have far-reaching implications. It may influence the strategies of other chip manufacturers, potentially leading to a broader trend of supply chain bifurcation or a more pronounced separation between Western and Chinese technological ecosystems. Furthermore, this strategic choice could impact Chinese equipment manufacturers, potentially limiting their access to the most lucrative segments of the semiconductor manufacturing market. For TSMC, the challenge lies in sourcing high-quality, reliable, and technologically advanced equipment from alternative global suppliers, ensuring that the transition does not impede its ambitious production timelines or compromise the quality of its 2nm chips. The company's ability to navigate these complexities will be crucial for maintaining its market leadership and meeting the insatiable demand for advanced semiconductors that power everything from artificial intelligence to next-generation computing. Audience impact. This reported decision by TSMC signals a significant trend in supply chain management, influencing global manufacturing strategies and the competitive landscape for equipment suppliers. We've covered a lot of ground today, from talent wars to trillion-dollar milestones and high-stakes meetings. Let's quickly recap the biggest stories. And that's a wrap on today's Essential Tech Updates. We saw how Samsung is navigating the fierce talent war, TSMC crushing it with a $1 trillion valuation, the candid chat between Nvidia and TSMC CEOs, and TSMC's strategic move away from Chinese equipment. Don't miss out on future insights. Hit that like button, subscribe to Qualcomm Pulse for your regular dose of tech news, ring that notification bell so you're always in the know, leave a comment with your thoughts, and follow us on all social platforms to stay connected. See you next time.